Hello everyone, and welcome to Financial Accounting. In today's video, I'm going to be covering Chapter 7, which is about internal control and cash. In this chapter, we're going to be talking about internal control, which is something that is a little bit conceptual. So they're going to be more talking about the different elements of internal control and what we mean by internal control and how to maintain an effective internal control system in any business. The other part of the chapter talks about cash, which I think it's an easy topic because we can all relate to cash. The only new topic for cash is the bank reconciliation statement, and this is one of the new things that we're going to learn in this chapter. So let's first start with something called Sarbanes-Oxley Act. And by the way, Sarbanes and Oxley, these were two congressmen back in 2002. They put together this act of the Sarbanes-Oxley Act of 2002, which is known as Sarbanes-Oxley, or sometimes we refer to it as SOX or SOX. And it's considered to be one of the major acts that affected the accounting and the auditing profession since a long time. So it applies only to companies whose stock is traded on public exchanges, or in other words, in the stock market. Its purpose was to maintain public confidence and trust in the financial reporting of companies, because there were a few scandals that happened in the early 2000s and maybe late 90s that made people lose trust in publicly traded companies. And the purpose of Sarbanes-Oxley Act of 2002 was to bring back public confidence and to maintain public confidence and trust in the financial reporting of companies. So Sarbanes-Oxley emphasized the importance of effective internal control, and that's why we're talking about it today as it's part of the chapter, because it focuses mainly on how to create or to develop effective internal control for any business. So what is internal control? Internal control is defined as something as the procedures and processes used by a company to satisfy three areas. The first thing is to safeguard its assets and to process information accurately and to ensure compliance with laws and regulations. So these are the three main objectives that any kind of effective internal controls is aiming for. Sarbanes-Oxley required companies to maintain effective internal controls over the recording of transactions and the preparation of financial statements. So here we can see the phases that happened during Sarbanes-Oxley time. So prior to the passage of Sarbanes-Oxley, or in other words, prior to 2002, most companies were not required to have strong internal controls, and many companies have weak internal controls, and that led to a lot of cases of fraud and theft, which also had an impact on investors, on stockholders, and on creditors. So Congress, they enacted Sarbanes-Oxley in 2002, and was signed by President Bush at the time. And after the passage of Sarbanes-Oxley, now companies are required to have effective internal controls, which of course had an impact on reducing the fraud and theft cases in most publicly traded companies. And of course, this would or actually helped investors, stockholders, and creditors to trust these companies more and to trust their financial statements. So Sarbanes-Oxley required companies and their independent accountants to report on the effectiveness of the company's internal controls. So the company's managers and also their auditors, which we refer to them as independent accountants, they need to report on the effectiveness of the company's internal controls. That's a new requirement that wasn't required before. So these reports are required to be filed with the company's annual report, which we refer to as the 10K. So the Securities and Exchange Commission, which is the SEC, refers to the annual report, which is the financial statements and some other reports and submitted together. We call it the 10K because that's the code for, or the form code that has to be submitted to the SEC. And here we have an example from eBay. We all know this company. And this is a paragraph that shows management annual report on internal control over financial reporting. So how management admits responsibility for establishing and maintaining adequate internal control. So I'll just read it for you so you can know how the language looks like. So as it says here, our management is responsible for establishing and maintaining adequate internal control over financial reporting. Our management, including our principal executive officer and principal financial officer, conducted an evaluation of the effectiveness of our internal control over financial reporting based on the Framework in Internal Control Integrated Framework of 2013 issued by the Committee of Sponsoring Organization of the Tradeway Commission. Based on its evaluation under the framework of internal control, integrated framework, our management concluded that our internal control over financial reporting was effective as of December 31st. So again, this kind of language was never seen before, but now on the Form 10-K, you can always see it for public companies. So now let's focus again on the objective of internal control. So the objective of internal control are to provide reasonable assurance in 3 areas. And I want you to remember these because this is material for multiple choice questions. So you need to be familiar with these 3 objectives. The first objective is to provide reasonable assurance that assets are safeguarded and used for business purposes. So the company's assets are protected and they're used for their intended use, not used for other personal use of the managers or anything like that. Then business information is accurate, or in other words, they're reliable, they're correct, something we can trust. So that's another objective of internal control. And then the last objective is to make sure that employees and managers comply or follow laws and regulations. So again, we have here the 3 objectives. Again, try to remember these 3 terms: safeguarding assets or protecting assets, accurate information or reliable information, and compliance with laws and regulations. And sometimes we can also add policies and procedures that the company or a business has to follow. So another importance of internal control is to prevent employees fraud. And employee fraud is one of those common kind of fraud because these people have access to assets, they have access to cash, they have access to company records. So sometimes they manipulate the records or try to misappropriate assets or steal assets. So that's why we have to be aware of employee fraud. So it's a serious concern of internal control, which is preventing employee fraud. Employee fraud is the intentional act of deceiving an employer for personal gain. That's the main thing that we have to remember. The key word is intentional. Okay, when it's intentional, that's on purpose. So it's not just an honest mistake. What makes fraud a fraud is that it's intentional. So what are the elements of internal control? The 3 internal control objectives can be achieved by applying 5 elements of internal control. So what are these elements? We have the control environment, we have risk assessment, we have control procedures, we have monitoring, and we have information and communication. So control environment is considered to be the foundation, the most important base that we can build internal control procedures on. And then before we can create the control procedures, we have to assess risk to see where is the risk coming from. And then we have the control procedures, then we have to monitor these control procedures, make sure that they're working effectively and efficiently. And then finally, we need to have some kind of form of information and communication that would hold this kind of control system together. So again, this diagram here explains the control environment, risk assessment, control procedures, monitoring. These are considered to be the umbrella that protects management and business from any kind of control threats. Information and communication is considered to be like the umbrella arm that actually holds all these other elements together. So let me stop here. In the next video, we're going to be talking about these elements in more details. And please make sure that you do some reading from the book because it also supports your understanding of that. Thank you.